All right, can you guys confirm that you can hear me? Just need one person to confirm. Just need one person to confirm before I start. All right, cool. So I'm gonna go ahead and get started. I'm gonna do the charts that you guys had requested in the chat, and then if you guys have any additional charts, if we have any more time, then I'll go ahead and get those too. So I'm gonna start with Julian. Julian, you asked for Tesla. I actually haven't looked at most of these charts yet, so I'm interested to see what I'm about to um, look at. So let me go ahead and take a look at Tesla. It's been a weird couple days on the market where we're kind of kangarooing up and down. As you can see, we dropped a ton in the past 2 days, but we managed to bounce back today. So let's see how the next few days are going to go. But so Tesla, for example, here what we have is the first thing we want to pay attention to when we're charting a stock is going to be the 1 day candles. So the 1 day candles, it looks like Tesla managed to use the 20-day moving average as a support today. As it dropped below it in the morning, it still managed to use it as a support and bounced right back up. So the wick of the candle dropped below the 20-day moving average. That was on the first morning sell-off that we all experienced, but it managed to push back and it closed over the 20-day moving average, which is a good sign for the stock. And it also closed over the 10-day moving average, which is also a good sign for the stock, unlike yesterday, where it dropped below the 10-day moving average, which was a bearish sign. One thing to keep in mind is that the Tesla volume on the way back up was less than the selling volume, which is not exactly a good sign for the stock. So you have to take that into a factor when you're about to trade this stock, that the volume on the way up is not as strong as the volume on the way down. So we're not in safe territory just yet, especially the fact that we're still closed below yesterday's opening price. So yesterday through the sell-off, Tesla dropped to about 962. Today, even on our recovery, we still couldn't manage to go over the closing price of yesterday. So now that we've got the macro level picture nailed, we want to move over into the micro picture to see what the stock is doing on a smaller scale. So right over here, when we're looking at the stock on a smaller scale, to be quite frank with you, I don't see an ideal setup for us here. There's really no setup, but I'll go ahead and draw the support and resistance lines because the stock could go either way because technically it's still lower than its previous date of trading. So what we could do is we could chart out some support and resistance lines to kind of help you guide the trade. Your support line for Tesla is going to be right at 950. So that's going to be the strongest support that it has because you can see this was the breakout point for it here. And as it pushed back above it, this was the point in which it gained more volume. You have another support for Tesla. If you want to get weaker supports, you can draw one right around $975. And then you also have a resistance. Let me see if it did anything in the extended hours. You also have a resistance of $991. So the stock will need to make it over $991 for us to consider Tesla to be safe because you would want it to start making higher highs after $991 because right now at this very second it could easily break down lower and get rejected off that $990 point. You don't want the stock to go back down and start making lower lows. By the way, if you guys hear any animals in the background, I'm babysitting somebody's cat and he's playing with my kitten, so they're being crazy. I can't lock them out because then they'll go even more crazy. So that's Tesla for you. To be quite frank and transparent, I don't see a good pattern from this one. I don't see a tradable setup just yet, so I would let the stock develop further before making any moves on it. Now, as far as AXP, we're probably, and I haven't looked at all these charts, but I'm assuming that we're going to go through many of charts that are not going to have good setups because the market moved all together the past 2 days. You're going to probably run into very repetitive charts when you're doing your analysis and your charting. So you have to keep that in mind. What is the overall market doing, and what are the stocks that I'm trying to trade doing? So as far as AXP goes, let me go ahead and check out the daily candle. So I'm seeing a bullish engulfing on the daily candle. You could see that this candle that it closed with today was able to engulf the previous day's candle. So this is a bullish sign for this stock. You still managed to open at 109 compared to its close the previous day at $103. So right over here, we should expect the same thing. The market should open up green tomorrow for AXP at least, or it may open slightly above and move up because bullish engulfings are more of a bullish sign for us for a candle, for a stock for its next move. So now that we've got the macro picture and we see that there could be bullish potential for the stock, we can go ahead and go into a micro scale and see what the stock's doing. So as you guys can see, there is a very clear bounce that AXP just made, and it's at a very critical support. So the support of $95 is critical because this was the support that AXP had struggled to break out above previously, and it finally managed to do so. So as it broke above it, came back down, bounced off of it. So remember how we talk about breakout plays? So this is what a breakout play looks like. The stock goes up. You don't chase it on the way up. You wait for it to come back down, and your entry should be right around the support or the previous resistance that it broke out from. So the stock bounced back up, and as you could see, this would have been your perfect entry, and you could ride the stock up. So now it's giving you another chance. The stock, again, came back down to that support and used it as a support and bounced off of it, giving you an entry at just above 95. And your stop loss on this stock should be at around $95 or just below it. And your first price target is going to be right around $100 because that's going to be the very next resistance that the stock is going to face before moving downward. Just keep in mind that with COVID in play, American Express is one of the stocks that are heavily affected, only because of its large capitalization in the market. Therefore, traders will be quick to sell it because they want to pull that money out and put it in safer stock. So your trading range is going to be between $95 and $100. I expect the stock to consolidate between these 2 points. And then eventually, if it breaks $100, what you want it to do is you want it to give you another breakout play. So say the stock breaks $100, it'll likely come back down and test the support before moving up one more time. So you want to keep that in mind. AXP looks good. I like what it's doing. I just, it all depends on market health. But if market health stays solid, then expect the stock to bounce off 95 and make a pretty decent move. So let's see what's next. We have Lewis. You asked for IBIO. I know that's going to be a popular one for a lot of you. And IBIO, I charted this yesterday, and it looks like it made it to our exact price target of $1.85 at market close. So the stock has been consolidating for quite a while. As you can see, it has a history of breaking out. Again, it breaks the $1.40 resistance right over here, breaks out, comes back down to test the support. It's like clockwork, guys. It happens almost every single time. The stock breaks out of a specific resistance, comes back down to test the support, giving you an entry, and then moves on back up. What we call as fake breakout is when the stock does this, but on the pullback, it ends up just actually falling through and not completing its breakout period. So you have to keep that in mind when you're trading stocks. You want the stock to stay above that significant support that it initially broke out from, because anytime that a resistance is broken out from, it automatically becomes a support, you guys. So you have to always keep that in mind. So iBio did the same exact thing not too long ago. Stock broke out, still using that $1.40 support, came back down and bounced perfectly off of it in the pre-market hours yesterday, and it hit that $1.85 resistance, came back down. So we made that our resistance, and now the stock is right at it. For iBio, I expect the stock, just based on after hour movement, I expect the stock to gap up tomorrow. If it gaps up tomorrow, you want to use that 185 price point as your support. Therefore, your stop loss should be just below it. So keep that in mind. If a stock gaps up above a specific resistance at any point, you want to turn that resistance into a support line in the morning when you're trading the stock. If you are a little bit more of a risk taker, you can set your stop loss just below that 185 mark, but not too low where you start eating away at your profits. Next price target for iBio is going to be the $2 mark, which for any penny stock, that any one single digit price target is going to be a very significant resistance. So if iBio makes makes it over $2 tomorrow, the stock will likely make it to $2.20. And then the next resistance it has is $2.35. So there's a lot of potential from IBIO tomorrow. If you're already in it, then props to you. Looks like you're going to get some nice returns tomorrow if it opens the way it closed today. But I'm liking what I'm seeing. I think there's a lot of potential, especially the fact that this is a COVID-involved stock. Next, Lewis, you also asked me for SINT. So SINT fooled all of us. It came back down to $2, below $2 this morning, and it actually made a massive move back up. So good for them. Let me see what their stock is doing overall. So one thing to keep in mind about SINT is today's volume was almost non-existent compared to the last 4 days. So we had 1 day of great volume, but that was selling volume. And then we had 1 day of short volume, 1 day of strong volume, and then 1 day of small volume. So there's an inconsistency that I'm seeing with this stock, which I personally don't like. I'm not a fan of stocks that don't have a consistent behavior because then their movement can become choppy and unexpected. Therefore, you can actually end up being stuck in the trade. It will be hard to get out of it. So as far as I'm seeing here, the stock looks bullish, but you want to take note of this volume because you typically want a stock that has more consistent volume, especially if it's a penny stock on the verge of a breakout. So let me go ahead and see what this stock is doing on a micro level. So we're gonna go over to the hourly charts. And by the way, it's kind of funny that you keep discovering things about yourself as you're trading through your career. I've noticed that my hourly candles are starting to become my favorite when I'm doing any analysis because that's really a good amount of time that you can look at within hourly candles for you to distinguish whether a stock is looking bullish or bearish and what kind of pattern it's making, especially if you're really familiar with how candlestick charts work. So on the hourly, what I'm seeing on this stock is a movement that's going to be a little tough to sustain, only because I don't like how strongly how vertical the stock is looking on this one way up. But based on the after hour movement, the stock may gap up. But if I were you, if it gaps up and I'm in the clear, I would turn to $2.60, which is the next resistance, into a support if it gaps up over 260, because I expect the stock to gap up, but it's likely not going to sustain that movement and it will likely start getting pushed back down. Now, say it gets pushed back down, you get out with profit, but it manages to bounce off 260 and you're seeing that volume is consistent, then maybe you can find a re-entry. But as far as this specific chart goes for this very moment, I believe that the stock will gap up tomorrow, but it will start selling off right away, just as it did 2 days ago on that massive breakout that it had. Alrighty, so Matt, you asked for, oh wait, I don't have anything from Matt. I have Dylan and Brian. You guys both asked for a KTOV. Let me go ahead and see what KTOV is up to. So I know that's a very popular stock. I know that I've heard the name a few times already, but I haven't looked at the charts at all. So let me see what we're getting here. Very impressive move by the stock today. That's a massive gap up that it had. You could see the stock gapped up to this point right over here. So this is the gapping from 90 cents all the way up to $1.08. So it opened up 18 cents above its price today, and gapped up on that target. So one thing for the future of this stock is expect it to fall back to fill this gap. So there's always a gap fill. Stocks always try to fill the gap that they made, but it may not come just yet, only because the stock is under so much hype. First thing I want to point out about this stock is that the RSI is way overbought. So we're over 80 points on the RSI, which is extremely overbought. So the stock is now just driven by hype. It may have a few more days of running, but as soon enough, this will become way overbought and people will try to get out of it. But if we're looking to see what the stock is doing, it actually had a bad after hours. So the stock dropped in the after hours from its day's highs of $1.40. Overall, I'm not really liking what I'm seeing on this stock. Julian, I believe you asked me what negative divergences look like. This is what a negative divergence looks like, and it would have gave you an idea that this stock was about to have a serious pullback. You can see that the stock made a higher high on its charts at this very point, and then again at this very point. So you could see obviously that this point is higher than the previous, but when you're looking at the RSI, you can see that it actually made a lower low. So notice how the stock makes a higher high and then a lower low, That's exactly what you need to pay attention to when you're using the RSI. It's not just a tool that tells you when things are overbought or oversold. It's a tool that tells you or gives you an idea about what's about to happen next. And the RSI here foreshadowed that the stock was about to have a pullback, which it indeed did. As the stock made this high, the RSI actually made a lower low and the stock dropped right away because this was so significant for those traders. By the way, this is on 2-hour candles. This is the importance of changing time intervals while you're trading, because the RSI may not have had a negative divergence on the 1 minute candles, but when you're changing between 1 minute, 1 hour, and 2 hours, you'll start seeing things in a more deep perspective. And it's very important that you're checking those hourly and 2-hour candles, because if you're not checking those hourly and 2-hour candles, you're going to be missing on more concrete information. Because think about the significance of 1 minute versus the significance of 1 hour. So if there's a negative divergence on the 1 minute charts, it may not be as significant to traders as a 1 hour negative divergence, so on and so forth. Same exact idea with overbought and oversold stocks. If it's overbought on the 1 minutes, it may still have a lot of room to run on the 1 day candles. So you always want to change time intervals when you're trading stocks. So that's going to be KTOV for Dylan and Brian. Dylan, you also requested VXRT or VXRT. I'm not sure if I'm even saying that right. So we charted this yesterday. We had an amazing return on this stock. Props to everybody that traded it correctly. If you sold too soon, don't beat yourself up, because nobody could foresee that a stock is about to triple in the next hour. Nobody could foresee that, because just as easily as it tripled, it could have easily lost a third of its value. So always keep that in mind when you're trading stock. Just because the stock is about to go up, it doesn't mean that it can't do the exact opposite. So if you secured your profits and you moved on, then props to you. So I haven't even looked at the 1 day candles on VXRT. Let me go ahead and see what they look like. I already know we're going to be oversold. Yep, this was actually from yesterday. We're overbought. I'm sorry. So this was from yesterday. Stock is definitely in the red. It's ready for a pullback, and the pullback is going to be just as strong as that breakout, you guys. So don't think that the stock is going to fly to the moon and go on forever. The stock will easily lose momentum and fall before you know it. But let me go ahead and take a look at what's going on the micro picture for this stock. So I'm going to clear all these resistance and support lines because they are kind of meaningful at this point. And I'm going to go ahead and see the very next support that the stock may fall to if it does drop back. And so the very next support that I'm seeing significantly is going to be right here at $5. So the stock could fall all the way back to $5 while it's pulling back, only because this was a significant support that it got rejected off today. Although the stock had a ton of volume, it still managed to get rejected at $5. Therefore, I'm making it a significant support. The stock did manage to move its way above 5, but just like I always say, this move is too vertical, guys. Vertical moves cannot always be sustained. Therefore, VXRT can easily break down from here and give us a very strong pullback, and even I wouldn't say a reversal. I would say that the stock's too hot for it to reverse at this point. But I will tell you that the stock will have a very strong pullback. So if you're in the stock, you are running a high risk play. I have no bullish intentions on this stock at this very moment. I may be wrong, I may be right, but at the end of the day, protecting your money is what we do here. And protecting your money in a stock like this, moving so vertically, capture those profits, walk away, and keep in mind and take this note down. Things like this happen to your portfolio a few times every year and maybe once a month, where you see the stock, it shoots up massively. So don't hold on to that trade to your heart. Make sure you always stay realistic that not all stocks will move this way. Think about it. How many times have you seen stocks move this way? You really don't see them move this way that often. So don't carry this emotion into your next trade, because then you'll have your expectations set too high. But what you really need to do is you need to trade like a robot. Things will move up all the time, things will go down all the time, but they won't make significant moves like this all the time. So that's VXRT. Richard, you asked for SONO. So let's see what SONO is doing on the 1 day candles. So it looks like there's a lot of indecisiveness in the stock. As you could see, for 3 days now, the stock makes impressive highs through the day. If you're not familiar with how I got the idea of it making impressive highs, These long wicks at the top of these candles represent the highest points that the stock went to in price before getting pulled back and closing at the top or the bottom of the body. If it's a red candle, it's the bottom of the body. If it's a green candle, it's the top of the body. And so these long wicks, you could see that the stock makes magnificent highs to $15.10 at one point, 14.60, and then today at 14.75, but still traders reject it back to close nearly at near the opening price that it had. So it gives us an idea that this stock has a lot of indecisiveness in its price at this very moment between traders, and it's likely because that it's at a very significant resistance. Now I don't know that for a fact, but let's go ahead and see what it's doing on the micro picture to see if there is a significant resistance that the stock has. Yep, so you can see that the stock is nearly in bullish territory, and therefore that breakout is critical to its survival in the next roll. But one thing that I do notice that I'm not really liking is the fact that the stock is making this vertical move without making like a gradual fluid higher high and higher lows. Regardless, though, you'll still have a support and resistance line. So your support line is going to be at 1362. And then your resistance line is going to be at $15. So you have a trading range between $13.60 and $15 that you can ride the stock in. I expect the stock to likely make what I would like to see the stock do rather is I would like to see it consolidate between the $13.60 and $15 before pushing higher, because if the stock manages to just push higher tomorrow rather than consolidating, there's a very good chance that the stock will fall back very quickly because the stock will not have a sustained move. Let me give you an idea of what I'm talking about. Notice how the stock, when it tried to break out from the 1150 range, notice how the stock created a bullish pennant pattern. It didn't just break out in a vertical way. It created this pennant pattern where it was able to consolidate nicely before pushing up. That's exactly what you want to see from stocks. You don't want to see anything go straight up. I mean, obviously your portfolio wants to see it, but at the same time, being realistic, you don't want to see a stock shoot straight up. You want it to create some kind of consolidation before it makes its next move over its next level. Looks like the stock may be consolidating here, creating some kind of bullish pennant pattern, which is a flag pattern in this case, which is a promising sign. So what we want the stock to do tomorrow, your main focus is that it stays over 1360. You can buy it as much as you want at 1360, because as long as it stays above that support, you're good. If it drops below it, set that stop loss and get out of the stock. You want it to stay over that support, consolidate. Any dip that's near 1360 but not under it is a gift to you for you to add more to your position in this case. But that stop loss has to be set. And then eventually you expect the stock to test 15. If it successfully breaks over 15, your next price target is going to be at 1544, which is the way I derived the 1544 is the very next resistance that the stock had gotten rejected off before, which is right over here at 1544. So I hope that makes sense for this stock. I'm seeing a lot of upside potential, but it does need to consolidate before it moves over to that target. So next, Kevin, you asked for JPM and Bank of America. So I'm going to go ahead and chart these stocks for you, but considering the limited dividends that the Fed's enforced on banks, they are likely to gap down tomorrow. So just a heads up, my analysis can only mean so much when it comes to bad news that came out post-market. So let me go ahead and see what the stock is doing on the one-day candles. So it looks like the stock, it managed to engulf the candle before it. So there's a good sign for you. So there's a bullish engulfing, which means that the stock may gap up tomorrow, because bullish engulfings do foresee a bullish future for the stock. But the stock still closed under the 10-day moving average, which is actually a bearish sign. You don't want your stock to be under the 10-day moving average. Let me give you an idea of why. Is because look at all these candles that try to make it over that 10-day moving average but get rejected. And as you can see, now it's starting to move as the moving average becomes a resistance line for the stock. So as long as it's under it, it's still not really safe and in bullish territory. But regardless, the stock had a great day, great volume, and a bullish engulfing. So it could gap up tomorrow. Remember, guys, news is one thing and charts are a whole different thing. You don't want to trade the news solely, because anybody who talks about, bad news on a company, or something that comes up that you may not understand why the stock moved back up, and it's usually because the stock may have already priced in the negative news before you and I even know that it exists. And that's a world that it's hard to get into that world. You're talking Wall Street professionals who know stuff way before we do, so they have already priced the news in. Just like job and unemployment numbers, when they were coming out so poorly the past few weeks, um, and you saw how the market wasn't even flinching at them, and that's the reason why we don't trade news. We trade charts, and so far JPM's chart looks like it's going to be a bullish day for it tomorrow. I'm going to give you an example of how I derive bullish engulfings. Look at this bullish engulfing candle right over here. You can see that the stock engulfed the previous candle, and the stock gapped up tomorrow. Although it had a red day, it gapped up the next day still and opened at 105 versus the previous day's close at 101. So there's an idea of another bullish engulfing, just to show you that patterns tend to repeat themselves. Let's go ahead and take a look at this stock at the micro level. So let me go ahead and show you our supports and resistance. So your support was previously at 96, but it looks like the stock dipped below it. So now the support is going to be at 94.50. So we're going to change that support to 94.50. And you can see that the stock is now using that as a support. So if you are in this stock, you should use that as your stop loss point. And you can use, let's see, 99.30 as your very next resistance. So you want the stock to move over 99.30 and eventually test 101 for it to make a significant move. Looks like the stock is bullish. It's coming out of a channel down pattern. It's an awkward channel down, but it's still coming out of a channel down pattern. I'm going to show you. It's more of a wedge pattern, but it could be either. So you can see that the stock finally broke out of the channel down pattern, and it's made a high over it. So now you should expect it to test the $100 price point, and eventually make a higher high over it. It won't shoot straight up, but it will make higher highs, fluidly moving up. Bank of America is likely going to have almost the same exact chart. Yep, you can see it right over here. The stock actually made a triple bottom. So we had charted this stock not too long ago, and we talked about the double bottom that it made. Now it's made a triple bottom, even a more solid bullish sign that the stock is about to move back up, and it's likely going to test the 25.30. What I expect it to do is it will likely test the 25.30 and get rejected, and then test it again before breaking out. So it may test it a few times before breaking out, and then eventually it will get stopped at the 26.20, which is the very next resistance, also your very next price target. And so we'll let this stock develop, make higher highs and higher lows. But as far as this chart goes, it looks like it's a bullish chart. But keep in mind the news about banks that came out after market. So charts may look one way, news may affect them a different way. So you have to put all that into factor when you're about to trade a stock. So next I have Alex. Alex, you asked for NCLH. Let's see what that stock is doing. So cruise lines really managed to hurt themselves this week as they dropped below the $18 very significant support for the stock. So you remember how we talked about very significant breakout points? So you could see that the stock's most impressive breakout came right around $18. That's when it had its largest run. So this was a very significant breakout point. So as the stock broke the $18 resistance, that resistance automatically became a significant support. And you wanted to see the stock pull back but not drop below 18, but it dropped the ball not one time but two times. So as far as I'm concerned, as a trader, $18 needs to be broken before I'm nearly bullish on the stock. I don't trust the stock until it breaks out of that $18 resistance, because on the way up, as it broke the resistance turned into a support. But on the way down, as it broke below the support, it turns back to an automatic resistance, and making this one a significant one because it's had very glorious breakouts and breakdowns over it. But as far as this very second goes, you have another resistance or support for the stock at 1450. So you can go ahead and enter the stock if you may, and leave your stop loss just below that 1450 level. Expect the stock to struggle getting over 18, especially with cruise lines, especially these stocks, because now cruise lines are seeing that they're going to have to delay We're seeing more and more COVID-19 cases start popping up. So it's not looking too good for these guys. If they break below 14, then they're going to struggle to and drop to 13.20. Then they're going to drop to 12, and then they're probably going to drop to 10. So you don't want to get caught on the wrong side of the stock. So if you are in the stock, you have to pay very close attention to one, the stock's charts themselves. You want to establish those support lines. You want to, second, pay attention to the news around cruise lines. Third, you want to see how many COVID cases are starting to pop up. The second and the third thing that you have to pay attention to do not have to be, they don't have to come at a specific sequence. It doesn't take a lot of intelligence for people to realize that if COVID-19 cases are starting to pop up left and right, they're likely going to delay stocks or reopenings or cruise lines. So you can kind of put your 2 cents into this one and establish that idea for yourself. Is it really a safe play for me to be bullish on NCLH, knowing that America just reported 45,000 new cases, setting a record? That's what you have to ask yourself when you're trading the stock. So that's NCLH. Let's go ahead and see what BBBY does. Best Buy, is that Best Buy? No, that's Bed Bath and Beyond. Bed Bath and Beyond. Let me go ahead and take a look at the 1-day candles and see what it's doing. So you can see that the stock barely made it over the 10-day moving average today. It managed to close around 947, which is just over the 10-day moving average, but it's still a lot weaker and lesser than yesterday's opening price. One other thing to note about this stock is that its volume is way lower than usual. So this move up is probably not going to be sustained, especially that this stock is an actual retail stock. So remember what we said about retail stocks, they're not going to be as healthy because so many retail stocks are struggling to stay alive during the COVID-19 pandemic. So the 1-day candle already looks weak on this one. Let's go ahead and see what it's doing on a micro picture. Okay, so I'm seeing a bearish flag. This is not a good sign for the stock at all. It's creating a bearish pennant, I should say, which usually and doesn't happen definitively, but it usually ends up breaking down from it. So if the stock is going to break down, where should you expect it to go to? It will go ahead and go to its next support before trying to bounce, but it will likely fail because of the fact that retail stocks are about to hurt. Notice that the stock has a gap up, and you notice how we said before that stocks tend to fill the gap when they want to move. So the stocks always try to fill the gap that they made. So the stock, if it breaks $9, will likely drop to $8.50 to fill that gap that it created right on this breakout between June 15th and June 16th. So from June 15th close to June 16th, the stock gapped up, and now it's trying to fill that gap back up. It doesn't happen right away. Sometimes it happens later on. So that's that's BBBY. Let's go ahead and take a look at Cloudera or CLDR. So this one's very popular as well. Let's go ahead and see what it's doing. Let me go ahead and take a look at the macro picture. Okay, very impressive move on this stock. I'm loving what I'm seeing. I'm seeing a bullish engulfing. I'm seeing the stock have more and more volume in it. So notice 4 days, very red volume here, but that was just a pullback, you guys. Like, just keep that in mind. The stock made a massive move, and it needed to pull back eventually. Therefore, this day came and it pulled it back. Stock was still consolidating. The sell-off happened on the market, therefore impacting the stock, but the stock was still in healthy shape. So the sell-off on it wasn't as strong of volume. And then the stock today bounced back up, moved over that 10-day moving average, engulfed the previous day's candle. So it's looking pretty bullish so far. Let's go ahead and see what it's doing on the micro picture. All right, let's see if it did anything in the extended hours. So the stock is at 13.13 still. It looks like the stock doesn't have a clear resistance until 13.35. So you want to put a resistance line right at 13.35. And your support in this case is going to be right at this very point right over here. So you have a support at $12.70. So your trading range is going to be between 12.70 and 13.35. Expect the stock to consolidate between these 2 points before trying to break 13.35 and move over to its first price target of 13.95. Its first price target is 13.95 because that's the previous high that it made before it got rejected and pulled down. So you also have another support at $12. Say that we have another sell-off tomorrow. It is Friday, so you have to keep that in mind. Say we have another sell-off, the stock may very well fall down to $12 again. So you don't want it to drop to 12 because the fall between 12.50 and 12 is a pretty significant move. So you want it to stay over that 12.60, putting your stop loss right around 12.50. Alrighty, so it looks like that's all the chart requests that I've had from you guys. I do have to attend the dinner, so I won't be doing any more chart requests. But before I leave you, I'm going to go ahead and show you SPY's chart, and we're going to talk about what it did today and what we expect from it in the near future. So it looks like SPY tried to recover today. The SPY is the S&P 500 for those of you who don't know. It tried to recover today, but you can see it's not nearly engulfing the previous day's candle. In fact, it closed right in the center of it, not very bullish at all. Volume looks weak compared to the sell-off volume. Stock, this is very significant for SPY. It's trading under both the 10 and the 20-day moving averages still. I don't trust SPY. I don't trust large positions until SPY is over the 10 and the 20-day moving averages, because right here it can get easily rejected and fall right back down. So the macro picture is still not looking too good for SPY. Let's see what it's doing on the micro picture. There's really no clear pattern for us to really pay attention to SPY. So trading it, your best bet, you're going to find support at $300, and then your resistance is going to be right at $315.60. So those are going to be your trading ranges for SPY tomorrow. Use those as your support and resistance, and we'll update it as the day goes. But anyways, thank you guys for checking in. I hope this was helpful. It's not as long as I thought it would be, but we didn't have that many chart requests. But thanks for tuning in. Don't rush your trades tomorrow. It is Friday. Let's end on a good note. You don't want to ruin your weekend because you rushed into a trade in the morning when you really should have just waited for a better established setup. Have a good day, you guys.